Well, we told you earlier about that survey that suggests grocery prices didn't peak last December, as many people thought, but in fact were still rising towards the end of April. So, is this important or not? Warren Hogan is an independent economist and an advisor to the small business lender Judo Bank. Warren, many thanks for your time. So just explain this to me, because every piece of evidence says inflation peaked back in December. If there's now evidence that UBS is discovering that parts of it are still going up, some of the most important parts of it are still rising in price, that might just change all the metrics for the Reserve Bank and, in fact, for people thinking about the future of interest rates.
Yeah, g'day Ross. Thanks for having me on the show. Look, I think this report highlights that when you've got elevated inflation and you get some sort of a shock that's inflationary, it can really sort of get away from you. And this is a problem we're going to have for a number of years. And in this case, it seems to be fresh food, which has picked up steam again. And that's really a function of the local weather conditions, farming conditions, all this sort of thing. So it is a very unfortunate development, because this is at the very heart of cost of living, of course. And I think should reinforce this message that the RBA's got to get inflation down to 3% or less as quickly as possible. And of course, they are saying they're committed to it, but whether or not they've done enough to get us there is another thing.
OK, so the Reserve Bank could well look through things such as weather factors when it comes to food prices or whatever it might be. What it can't afford to look through is rising wages. And we saw evidence of that last week. And in particular, the unemployment numbers starting to rise. So you got the two things starting to coincide.
Yeah, well, the data we got last week is painting a constructive picture, I would say, in the sense that the wage growth numbers are growing, but they're at a modest, gradual uplift, still well below what we're seeing in other economies. And of course, we're now starting to see this bigger population lift kick through and push the unemployment rate up. But on the wages numbers, I think it's way too early. You can see in this chart, it's way too early to be confident that we're past the worst of us. This chart highlights the percentage of wage increases of different levels, and we've seen a big drop in low wage outcomes, i.e. 0 to 3.
So that's that top line. It's coming down very sharply. So that's people getting wage rises between 0 and 3%, right?
That's right. And then the other high number is wage rises over 4%, which had been very, very low for a number of years. And of course now is up around 36% of the workforce. And then you've got the sort of the Goldilocks outcome, the 3 to 4% increases, which is what the RBA is targeting for the overall wage numbers over the medium to long term. And what this chart shows you is that the low wage increases of the past are disappearing, and the high wage increases that are problematic are rising in their significance in the workforce. And these numbers, I think, are going to continue to show wage pressures right through into 2024. And of course, put a lot of spotlight on the upcoming Fair Work Commission decision on the minimum and award wages.
Because even the budget does indicate that over the course of the next 12 to 18 months, that real wages will start going forwards again. In other words, the wage rises will be greater than inflation. And that's ultimately what unions and workers would say that they require after a long period of time where real wages have been going backwards.
Well, I think the unions would argue right now there's still a catch-up for wages. That is, their 7% submission from the ACTU to the Fair Work Commission is that real wages have gone back so far in the last couple of years that workers need to play catch-up. And you know, there's a lot of reasons why that's fair enough. But of course, that's what risks getting this higher elevated level of wages sort of stuck in the economy. And of course, risks the fall in inflation, which the Treasury and the RBA are forecasting, which of course is the real source of the improvement in real wages. So we've still got a government and an RBA expecting, you know, a good outcome, a Goldilocks. That is a drift down in inflation, but without a big drift up in wages, and everything settling down at a nice, stable situation.
I'll tell you what, Warren Hogan, always good to have you on the program. Many thanks for your time today.
Thanks, Ross.